He is the CEO of Schwartz Investment Counsel, portfolio manager of the Ave Maria Mutual Funds, and author of In God We Trust, Morally Responsible Investing. He's here tonight to discuss the current state of the U.S. economy, high inflation, those interest rates, and more. Please welcome back to the program, George Schwartz. George, earlier this week, the Dow dropped over 1,000 points, rattling Wall Street and the world markets. The S&P had its worst day in 2 years, dropping 3%. NASDAQ did the same. George, what's driving these wild gyrations in the U.S. market?
Well, as you and I have talked about many times, Raymond, the stock market does not like uncertainty. There are a tremendous number of uncertainties at the present time around the world and at home here. But that's causing volatility. One of the issues that doesn't get enough attention, I don't think, is the Middle East right now. Of course, there's been talk of maybe the war is going to escalate and Iran's going to invade Israel or vice versa. But that is got the potential, in my mind, of being a significant problem for our economy and especially the stock market.
Yeah.
There's no one what the effect it'll have on the stock market if a big war breaks out.
Before the U.S. markets took a tumble, the Asian markets were trembling, and we watched, they had a, 12%, decline. Even Warren Buffett selling some of his tech stocks, including Apple, were blamed for the dip. Is any of that credible, that presaged and is tied to the U.S. market?
Yes, the Asian market's tied to the U.S. market, particularly the Mag 7 stocks, the big industrial mega cap high-tech companies. The speculators, especially hedge funds, have been borrowing money in a cheap currency, the yuan, converting it to dollars and buying U.S. stocks, particularly the Magnificent Seven. When interest rates rose in Japan, that whole trade had to be unwound and it resulted in panic selling. The other thing is panicky, at least according to my friends on Wall Street, is the upcoming election for president. They are in a panic state that Kamala Harris may become our next president, God forbid.
And you think that's what the sell-off is about, partially? The worry that you might have a continuation of the Biden years?
Yeah, or the Obama years, if you want to call it that. But she's got, currently, it would appear she's got the money and the momentum and the media all in her favor. And I get a kick out of the media that I think is trying to turn her into something she's not. But the very liberal media is what the Wall Street Journal called doing a transfiguration of Kamala, trying to turn her into a combination of Helen of Troy and Margaret Thatcher. But she's and then, of course, as you well know, in the last week or two, she's started to outpoll President Trump, even in a couple of the swing states where he was leading by several percentage points.
Yeah.
So it's scary. And if that continues, or that trend, her recent strength continues, and hopefully it won't, but the Wall Street people I know could turn into a full panic mode and do significant selling.
Okay, well, tell me, with all this uncertainty we're seeing, and I've spoken to a number of economists, they are saying the R word again, George. What do you think we're about to see as far as a recession is concerned? Are we on the precipice of a recession?
We could be, but for the moment, the economy remains relatively strong. And that's not because of Biden and Kamala, but in spite of them, in spite of Biden's policies, which have been detrimental in so many respects.
But George, how can you say this economy is strong? We have a debt ratio. I saw something the other day where we're paying off like 76% of every tax dollar accrued is paid out in interest on our debt. That seems like a very wobbly and unstable government and underlying economy to me.
And that's one of the things that could push us into a recession, the long anticipated recession. But for the moment, corporate profits remain very strong.
Yeah.
And that's buoying the stock market.
Yeah.
That could change quickly, of course, but for the time being, corporate profits are very strong.
This volatility in the market has placed a lot of pressure on Fed Chairman Jerome Powell to cut interest rates sooner rather than later. As Americans begin to feel the pinch on loans and mortgages and credit card rates, high inflation and prices continue to be a source of anxiety, George. Do you see the Fed cutting those rates anytime soon?
Yes, they'll probably be doing it in the month of September. They should have done it last month. But there are signs of recession that could be developing. They're not real strong right now, but our friend Larry Kudlow has opined that we could be on the cusp of a recession. Again, the long anticipated recession, or the long predicted recession. And inflation will be a problem if Kamala Harris becomes president, because she will continue the spending, reckless spending of the Biden administration, and that's going to keep inflation strong and probably stop interest rates from dropping as much as they could under the Fed's leadership.
You think a piece of that then is tied, the inflationary rate we're seeing and the pressures on the economy. You see that tied to the $2 trillion plus in federal spending that was pushed out the door in these infrastructure packages, et cetera?
Exactly right, Raymond. Yes. Spending has been reckless and out of control for quite some time now.
Okay, I want to talk about investing for a moment before we run out of time, and investment strategy, George. The market obviously is in flux. A lot of people are terrified about losing what they've already got invested in their 401ks. Others are just as terrified about getting into the market at all. What should they justify? What should these justifiably skittish potential investors be thinking? What should be their posture? Should they stay out of the market now?
No, let's stay out of the market. The first rule of investing is diversification. Not have all your eggs in one basket. So investors should be diversified, and they should be long-term oriented. That's the second most important thing, being long-term oriented. And I've been preaching, as you know, for years, to not try to outguess the near-term swings in the market, because they're unpredictable, and they're almost unpredictable. And most of the time, it's a waste of time trying to say what the next quarter is going to look like, or what the next 6 months is going to look like in terms of the economy or the stock market.
George, you talked about Kamala Harris and Joe Biden's record. Should Trump return to office, what do you think we could be in the market of seeing here from economic policy? Obviously, he's promised energy independence. He wants to lower regulations. He wants to put tariffs on China, the goods we trade to China, and vice versa. Where will that put us in an economic forecast?
Well, he can do an awful lot of good if he returns to office, and including unwinding some of the regulations that Trump has put in place, unwinding this $1 trillion climate package
that Biden put in place.
The Biden, I'm sorry, yeah. But the economy could likely be a lot stronger. But one of the things that we've got to be careful of under a new Trump administration is the tariffs. And he's very proud of the fact that he's the tariff man. But those, in my view, can be very destructive to the U.S. economy. The tariffs are not paid for by foreign governments or foreign companies. They're really paid for by the U.S. consumers. So I think that's a spot that I hope Biden can get better advice on. I mean, not Biden, Trump can get better advice on.
Okay.
But,
George, before we go, you and the Ave Maria Funds made some headlines earlier this year. You won something called the Lipper Award, which is a prestigious honor given to outstanding investment performance to individual funds. Which of your funds won this, and why? Why do you think?
Well, that was the Ave Maria Bond Fund. Here's the award right here from Lipper. It's the best fund for 3 years, 5 years, and 10 years. And we're very proud of it. And the bond fund has had a terrific track record for the 20 years of its existence. And I'm very happy and proud to report on that. And thanks for bringing it up.
Okay, well, now I know where I have to move some of my cash because everywhere else I'm dying here, George. We'll leave it there. In God We Trust, Morally Responsible Investing by George Schwartz is available at bookstores everywhere. Find out more about the Ave Maria Mutual Funds at AveMariaFunds.com. Thank you, George.
Thank you, Raymond.